All eyes on the US CPI print coming this week, particularly after inflation expectations rattled markets. We were talking about inflation earlier. Where specifically do you see it coming through in the US economy? Because, of course, a weaker dollar, imports, exports, this all has an impact, as does the deficit.
True. I mean, if you, in the simplest way, you split up core inflation into two categories. One is services, one is goods. The bigger factor is always services, because 75% or whatever of the US economy is services. And that is driven by the diminishing slack of the US economy. What you're referring to, the weaker currency and maybe also some commodity prices and all that, that is showing up in core goods inflation. Core goods inflation has been extremely weak over the last several months, but to be fair, it has been very weak over the last decade, because I always keep saying that shops like Walmart, they have not discovered China only last year. You know, we had the downward pressure on US core goods prices for many years. I think it's really crucial what happens to services, and services is driven by slack, and that is diminishing.
Let's go all Mundell on you. Can the dollar come to the rescue?
For higher or lower inflation, or the economy?
To boost exports and you know, domestic economy up theoretically, and exports come around because of dollar movement.
Sure. I mean, at the margin, it helps, right? If the dollar is weakening, it helps at the margin. But I mean, let's remind ourselves. Well, you have talked about Italy, and I mean, the US has a current account deficit with Italy, and had a deficit when the euro was at 150 odd. You know, I mean, that tells us there is more than just it needs more than just a weaker currency to fix it.